Hey everyone, welcome back to Crypto Cash. Thanks again for joining me here. Hope you're having a fantastic day. We're taking a quick look here at Bitcoin, seeing what's going on. We got that awesome fake out there at exactly 38,000. We're talking to the dollar, 38,000 even for that perfect liquidity sweep, and the price has come back down. So we're going to talk about this liquidity level, some back end stuff here as well, and just kind of get to know what's going on in the back end here with Bitcoin. So if you're new to the channel, just know I'm not a financial advisor. I do love teach people to trade. Hope you can learn something here today if you want to become a better trader again. CryptoCash.tech is a site linked down below. We also have an exclusive partnership here with Bitunix. Be sure to check that out. Link down below for that. Phenomenal benefits, mainly partnering with them because they offer a no KYC, no VPN alternative for those in the US and Canada and other countries as well. So be sure to check them out. Again, highly recommended. Very, very good exchange. So what we want to talk about here with Bitcoin, well, we got the double top pattern, of course. Elliott Wave kind of letting us know if this is the top, we could very well see 34,800 again, almost exactly a perfect bounce all the way down to the bottom. So it's an interesting situation nonetheless, and we're going to talk about best and worst case scenario. So yesterday was a phenomenal day, up 5.5, almost 6%, comes up to 38,000, makes out a lot of late longs, and then the price comes right back down. So I'm so sorry, breakout traders, you struck out again, and that's okay. You'll get another attempt eventually soon. I'm confident of that. But there is chance too where we could see the price action actually pull back much lower now that we kind of topped out with that double top and essentially swept all that liquidity. Okay, so once you sweep the liquidity, price action will continue to lower areas. There is lower liquidity levels too we're going to talk about. Speaking of which, let's just go ahead and jump into the back end data here first, kind of see what's going on. So yesterday, big surprise, tons of liquidation, mostly shorts getting liquidated. Today so far it's fairly break even, but some longs are getting hit as well, but not quite as hard because I don't think we have as many longs going long this time around. It's kind of these probably a little gun shy is my guess, but if you take a look at the longs versus shorts, we have definitely switched. We see a lot more overall shorts in the market here. That's aggregated across multiple exchanges. And if we take a look here quickly at see the heat map here for open interest, we can recognize that based on, let's go ahead and update this here really quick, based on longs are, oh, big surprise, longs are long at 37,500. We have the largest amount of accumulation there at that point. So it really just tells us that we got some folks trying to buy each dip. They bought 37.5, they bought 37.250, they even bought 36.9, okay? And the price just keeps on going down. So please be careful just buying each dip. Different story, I guess, if you're spot trading, adding to your position overall, but it just doesn't make a ton of sense to try to just catch a falling knife. Okay, so I teach that to my community all the time. Try not to do that. Here are some late shorts actually in profit. So we got a heavy amount of shorts at 37,000 and 37,200. So the reason why this is relevant, because I got the question, hey, what's the deal with the heat map there? Why is that relevant? Well, if we know where the most amount of shorts and longs are hanging out, we know where there's going to be some liquidation levels and where the whales are going to be targeting. Because you got to understand, these are just whale games right now. Look at this here. Look at this big picture. This is basically the last 7 days of trading. Look at these liquidation levels. When I made my video last night, it was at 37.6. I mentioned and said 38,000 is inevitable. Look at that. Comes right up there to sweep this perfect little level here of liquidation at 38,000 or 37,950. Turns right around at 38,000 even and has been coming down ever since. Okay, so you can't tell me that's just coincidence. That's exactly what they do. They seek out those liquidation levels and they sweep them. Okay. Now again, you're probably saying, well, what about this upper level? Well, these are all the shorts that entered the market after the price hit 38,000. That isn't before. There was very little, if you saw from yesterday's video. In fact, if I could go ahead and pull this up here for you, you can see, look at that heavy amount of shorts right there at 38,000, and they got smashed. Okay, so again, try not to be one of those folks. Try not to be a late long, or of course, somebody that is in a position that you can kind of get wrecked with. All right. Again, easy said than done now, but I kind of gave you fair warning yesterday, anyways, if you watched. So I hope you weren't the type to just fast forward through to the end to try to get the answer. Because honestly, you can't just get an answer. There's no bumper sticker that can really explain these things. You got to look at a lot of little situations to kind of understand. Anyways, summarizing here, the daily, still looking bullish. You got to keep in mind we're not just truly bearish because we have a little bit of a red day. You can recognize that we are still in good shape here, over 50, under 70 in the RSI. Money flow index, everything seems to be in pretty good shape here. It's really not that terrible. We're still over the 20-day SMA. Until we lose that, I don't think we really have much cause for immediate concern. Let's go ahead and take a look at the 4 hour. This does kind of tell us a little bit more. We are down here testing that 50 on the RSI, pretty much lost it. So tentatively, we are bearish here on the 4 hour. The money flow index is coming down. MACD is trying to diverge, hasn't officially yet, but wants to. And now we're officially underneath the 50 and the 20-day SMA. Okay, so those are all bearish signs. Typically not a great situation. As we can see here as well, there's not a massive amount of overextension to the downside either. We could continue to see the price action come lower. Okay. Last thing we want to look at would be just say the hourly here and recognize that we are pretty darn close on the money flow index here. Well, actually, sorry, the RSI is getting close to 30. Money flow index is below that. And if we take a look at its history, when the MFI comes down below 30, the price action either goes sideways and down, like this example here, or shoots up and recovers. Okay, we've had this here, again, down as well, price back, bounce back. It's honestly not a lot of consistency. So to those who are asking about that being like a valid resource for buying the dip, I wouldn't say so. I think more important, you want to focus on Fibonacci retracement levels. We can see 0.5 there at 36,400, holding strong so far. Keep in mind we are below some key level moving averages. Take a look at the Ichimoku cloud. We're still above the cloud, but barely. We lost momentum on the conversion line and the baseline and lagging spans not free and clear. So this is exactly a perfect scenario for not taking a trade. I want to repeat that. Not taking a trade. Please understand that. It's okay. It's all well and good to buy the dip with maybe a little bit of hope. But at this point here, this is not a good situation. It's not ideal. And there's no confirmation that we're going to just flip right around. While it could happen, the probability of price going down further from here is greater because we're going to be traveling into the cloud here soon, and that's going to be working as a resistance level. And all green lights here to leave a long position open have officially closed. Okay. So honestly, you probably should have closed it last night, but hindsight's 20/20, of course. And we're not here to talk about that because again, you're going to miss out on tons of opportunity and you're going to make some poor decisions. I've made plenty in my day. I still make them from time to time, just a little less often, right? And again, that's truly just the way it works. So please learn from your mistakes if you made them. And at this point, the mistake you cannot make or shouldn't make is just jumping in for a long position right now because we don't have confirmation we're going to hold this level. Yes, it's a Fibonacci retracement level, but everything on the 4 hours is telling us it wants to go down. Once more, this could absolutely be a fake out, just like this was last night. Complete manipulation to liquidate a bunch of shorts, and now they're squeezing the longs. Okay, it's just standard stuff. So please, again, low leverage, low position size if you're newer. I also got the question earlier too, is like, what's the problem with high leverage if you're newer? And truth is, it's not like it's a problem. It's just that most people haven't developed the risk tolerance and the risk management very well. And until you do, and you get kind of a good system in place, you're going to continue to get wrecked if you just kind of jump in willy-nilly. Okay, so again, try to focus on some of those things. If you are new to my channel and you are part of my premium group, for example, be sure to watch those trading videos that I provide. I talk a lot about emotional trading and how to kind of circumvent those things. There's ways you can navigate these markets without getting thoroughly rinsed. Okay. All right, folks, that's all I got for you. Thanks again so much for watching. Hope this was educational, beneficial. Please like the video, follow in the whole 9 yards. Obviously, jump over to our Twitter, Telegram, or Discord. We've got a really cool, awesome community there. I do look forward to work with you. Hope you have a great rest of your day. We'll see you in the next one. Take care.